All right, guys, welcome in. Basically, I'm not a financial advisor. However, we are going to be learning about money, and I can't guarantee anyone the results I've had, but I can suggest the possibility that you'll do even better than I've done. However, let's dive into it. We're going to hop into the stock market, real estate, and staking crypto. We're going to start with the stock market because this is the main focus because we're going to come here, here, and then circle back to here. So basically, I want you guys to understand that a tax-free savings account is exactly what it sounds like. It is tax-free. You do not have to claim that money on your taxes at the end of the year. No one looks at it. The government doesn't care about it. It's yours, especially if it's in something like Questrade or Wealthsimple, which are independent brokers, as opposed to, your traditional bank. But that's a whole other conversation. Basically, this is like an overview of a bunch of financial knowledge that I've been learning and applying for the past year and a half, maybe year and 2 months. And I'm currently getting about a 14% return on my money in stocks, TFSA, RRSP, crypto, not real estate. I'm not in the real estate market. We'll talk about that later. But anyway, let's officially dive in. The TFSA is like I said, exactly what it sounds. It's a tax-free savings account. There's a limit. You can only put in like $6, $7, or $8,000 a year or something. But if you've never put money in your TFSA, then you have a lifetime's worth of since you were 18 to put it in. So you could probably put in $90,000 at once before it caps you out, and then $8,000 a year from there on forward. That's how the TFSA works. The RRSP, the retirement account, exactly what it sounds like. It's a retirement account, except that it's not tax free. When you take your money out of your RRSP 20, 30 years down the road, it is taxed as income, but it is not taxable while it's in the account. The account is not taxable while it's growing. And basically, a TFSA and an RSP are the exact same thing for two different purposes. They're a collection of gold, commodities, bonds, companies, stocks, ETFs, all in like one bundled package that is guaranteed to do well as long as you put money in it. It's not just like a lot of people think that the TFSA and the RSP are just savings accounts that you just save for retirement, and everybody justifies it like this. They're like, well, I'll never have enough to save for retirement, so fuck locking money away from myself for 20 years. Like, why would I do that to myself, right? But like the truth is it grows quite substantially. The more you get, the more money you make, and we'll talk about that later. Index funds. These are groups of companies. So like you could have Apple, Windows, Nvidia, Subway, McDonald's, Ford, all in like one package, and you're investing in all of them at once. And you're more like index funds have a proven record to be super profitable almost regardless of, as long as you pick from the large amounts of successful ones, you'll do pretty okay. There's very few that don't perform well, and you can expect like a 4% return in the beginning, 5% return in the beginning with an index fund, all the way up to like 10 to 11% return after a few years and after some compound interest and accumulation. I'll explain compound interest when we get to this. Okay, real estate. This is risk versus reward. I am not in the market yet to invest in real estate, which is why I'm not really in the right mindset to decide if I would ever do it or not. Because I don't have $200,000 to drop on a house. You know what I mean? Or 100,000 or 75,000, whatever the price of the house is. And but I have researched the fuck out of it, and I am willing to talk about it as one of the investment options because I do believe that for someone watching this, they might actually have that 100 grand that they want to drop on real estate. So first of all, if you're Canadian, do not. I should not say do not. Like, don't listen to me. I'm just some guy on the internet. But like, from what I've been fucking researching, with how politics are going in Canada, which I'm very in tune with, the market is way overappreciated. Living in Vancouver or Toronto is the same price as like living in Dubai or London or like a super like Paris. You know what I mean? Like $1 million for a crapshoot of a house. And in order to like make money in real estate, your house has to appreciate over time. And houses are overappreciated right now, meaning that they're actually much more likely to come down in price in the next 5, 10 years as opposed to going up. Unless there is one exception city that I just thought of right now off the top of my head, because I look at real estate all the time. Edmonton is like the cheapest city in the entire fucking country. Like, and they have beautiful neighborhoods, beautiful houses. They're just way cheaper. You can get trailer homes for like 50,000, apartments for 75,000 to 125,000, like 2 bedroom apartments with dishwashers and full size fridges. And you can buy like the house that I'm in right now. This is like probably a $600,000 house. I don't actually know the price of this house, but like a house like this in Edmonton is like 380 to $420,000. So maybe you can still do real estate in Edmonton, but I am waiting until I have the money for one, but I'm also waiting to see if house prices come down to see if it's even worth thinking about. Because right now, my personal preference is I think real estate, unless you already have 60 homes making money for you, like I don't see this being like the time to enter the game. Maybe it's the time to play the game and make all the profits off these huge houses that you've owned for 20 years that you made a ton of money off of. But if you're buying in now, not worth it. Not to me. Anyway, the profit from a house, if you're wondering about the money that you can make from a house, you can own a house for up to like 5, 6 years and then pull equity out of it, aka cash. I'm still wrapping my head around what equity really means. So for those of you that do know what it means, bear with me. But basically, you can pull equity out of your home, aka cash, and drop that on another house while still owning that house and still renting that house out. And then when the house appreciates 10 years down the road or 7 years down the road, you sell it and you make your huge profit. And then your passive income is the rent money. So, like, let's say the mortgage payment and the utilities and everything is like, I don't know, like $2,300 a month, and you rent the house out for $2,600 a month or $2,700 a month. That's like $400 a month coming your way. Own 20 houses, double. Like, it's a lot of money. So basically, real estate, you can make your money now and spend it now and live your rich life now, but you got to be fucking good. Investing is much more forgiving than you think, and that comes to this, and we'll get to it. Don't worry. But yeah. Okay, staking crypto. Deep knowledge required. Yes. Cryptocurrency is very volatile. And just like stocks, there's 2 ways to do it. You can hold, like what I do, just put my money in the S&P 500 over and over and over again and just watch it grow. Or you can day trade, like trade by the minute, like watch the charts and actually bet on it and make profits throughout the day. People do that with stocks, but people more commonly do that with crypto these days. Like in day trading, volatility is a good thing because prices are going up and down all the time, and you can make money whether it goes up or down in crypto and in stocks, but especially in crypto. You can make money when it goes down, you can make money when it goes up. All you have to do is buy or sell, a buy order or a sell order. And that leads people to make a lot of money if they're really good at it. But like I'm suggesting here from real estate, the risk is high, the reward is high. Crypto, the risk is high, the reward is high. But what's this word staking mean? Staking means crypto staking, aka holding. The same thing. What is it? Oh my God. What's happening right now? Staking is the exact same thing as investing in the S&P 500. Basically, I can't think of the word right now, but all I do is throw money into the S&P 500 and I'm never fucking touching it for 20 years. I can take it out whenever I want to, but I'm just going to watch it grow. That's the same as staking crypto, except it grows like this and then it comes down like this and it grows like this. And like there is proven track record of consistent upwards trends in the charts over the last 15, 16 years of the existence of crypto. But basically, you can like watch your money go up and down so many times that it makes you sick. That's the thing that I'm not willing to go for when it comes to staking crypto. I don't want to put $10,000 in there and then watch it turn into 100 grand and then watch it turn into 30 grand and then watch it turn into 120 grand and then watch it turn into 45 grand. Like I couldn't take that. So what I do with my Wealthsimple account, which is where I invest, hold crypto, stocks, TFSA, and RSPs all in one account. I buy like $200 worth of Bitcoin and I buy like $200 worth of Ethereum. 3 4 weeks goes by, it turns into like $650. That's like whatever $300 profit or something like that. I then take that money and buy my weed with it. I buy my vapes with it. I buy a pair of shoes with it. All my dumb impulse buys I get with my crypto money because it's dumb, stupid money that I made dumb, stupid fast anyway. And I see where like I could put in maybe $1,200 and watch it turn into 4,000, but I don't want to just be like taking these little bits of money and growing it and taking it and growing it and taking it just so I can live better month to month. I'd rather take my money back to the stock market. So a little bit of crypto I do, but not really. Real estate, not in my wheelhouse yet, but stock market is where everyone can start. And where do you start? We're coming to it. The S&P 500. Okay. The S&P 500 for dummies is the 500 biggest companies in the world in one gigantic fucking index fund. 500 companies, the most Tesla, Apple, everything. And the stock has been going up and up and up and up at about an 8% return on bad years and an 11 to 12% on extremely good years. And as low as 6% for like 2 years in 1972. But the S&P 500 has been around since like the 1920s or the 1930s. And it's never gone down. Like historically ever. You just make money. So basically, I have about $5,000 put into the S&P 500, and it's been maybe 9 months in the S&P 500, and I've already made about $1,800 back, like another $1,800 on top of the $5,000 that I put in. So what a lot of people do is they put all their eggs in one basket, which you would oftentimes always tell someone, never put all your eggs in one basket. But with the S&P 500, you get a pass because that is the most guaranteed index fund in the entire fucking world. So then you might be thinking, well, what about stocks, like actual stocks, like a single stock? Like, what if I just buy Ford? What if I just buy Walmart? What if I just buy Mr. Sub? What if I just buy Shoppers Drug Mart? What if I just buy Save on Foods? That's not going to get you anywhere. You have to pick the top 500 companies, individual stocks, and invest in those. And only pick like one or two. Keep your stock portfolio small. Like I have a TFSA, an RSP. I invest in Apple. I invest in the S&P 500, and I have a little bit of Bitcoin and a little bit of Ethereum. That's it. But all together in one portfolio, in one app, which I might share a link to in this video, like in the description. But yeah, I don't know, guys. I just feel like I've put a lot on the table there right now. But I didn't mean to leave you hanging there. I know I was on a train of thought there, but I kind of lost it. But it all has to come to this, has to come to my final thoughts and just like a little bit about my journey. So basically, I just spewed out all the most important pieces of financial information that I have learned in the last year and a half off of YouTube and some Udemy courses and some Coursera courses. And basically, none of this shit comes to fruition unless the thought of growing your money instead of spending your money starts to consume you. I have historically been bad with money my entire life. I'm 29 and I'm just getting started with investing, which is probably a good age in the long run. But for right now, I feel ancient because this is as old as I've ever been. And all I can think about is like, what if I started this 8 years ago? But basically, I started investing about 1 year and 2 months ago. My initial investment was $10,000, and I put in about $1,000 a month into all my accounts, RSPs, TFSAs, S&P 500, the whole portfolio, Apple and stuff. And I'm on pace to retire at 55 with a whopping bare minimum. If I get a 7% return for the next 20 years, which I'm already doing better than that, but you have to account for the worst when you calculate this shit. If I get a 7% return for the next 20, 22, 23 years, I'm at $1.5 million and growing. And I can like take money out before I put it back in. And I've never made more than $20 an hour in my entire life. I've done some entrepreneurial shit in my day. I've had 3 businesses And I actually just stopped doing Facebook Marketplace sales a few months ago, and I'm on disability income now. Like I'm on H because of my mental health stuff. It's no big deal. Don't feel bad for me. It's honestly like amazing. I just get free money for doing nothing right now. But I have plans when my car's running again to get a job in a kitchen and go back into cooking, because cooking will feel so much worth it, so much more worth it, knowing that all the money that I'm making is going towards, well, not all the money, but a lot of the money that I'll be making from the kitchen and Aish at the same time, um, can invest it. And I want you guys to get curious about investing. I just, it's been the most amazing journey, and I just want to share the love with everyone. And like, I'm by no means rich. Like, I still, I'm not going to say what my month to month is, but I'm doing fine. But I could have been a hella more ahead of myself if I started this a long time ago. So if you're 20 years old watching this, this will just be the seed that got planted. If you're like 28 years old and you just watched all this, it might hit you a little harder. But if you're like 32, you might even want to get started. The first phase of investing is like 16 to like 25. That's the first phase. The people that get in that window end up with the most money as long as they're good at what they do and they keep investing. The 25 to 30, 32, 35 range is the second phase. And that's where I joined in. It's the third phase where it's really hard to catch up with compound interest and it's really hard to make the same money. You got to start this shit early. You got to get your money growing fast.